Welcome traders to our start of week / post week market review video. So jumping straight into things here, let's go over what happened last week. So as you remember, probably from our midweek technical analysis video, we spoke about this candlestick here being the open of the fresh week on Sunday at 10 p.m. GMT. As you can see, price surpassed this point of interest and then continued on bullish. We found a point of resistance at this previous all-time high of 4,058, give or take. You won't really see that resistance being tested. For example, if I just go down to our sort of lower time frame for you, you'll see exactly what I'm talking about. As you can see, price came up to this level and we sort of tested it a little bit until we saw price cleanly break through, giving us a break and retest pattern. Going back to our hour one then, zooming all the way in here. So bear with me. Okay, cool, we're back. Right, so from there, price ended up breaking through this level and then we pushed on bullish, continued on bullish, and created this new all-time high here at 4,180. From there, throughout the early hours of the Tuesday morning, all the way up until the New York session, we saw some bearish volume enter the market, and we also understood this by drawing in our fixed range volume profile. Price from there, then we picked up some volume at 2 p.m. so New York session open, tested on this supply and demand area, or should I say POC, this point of control, and then price pushed on and broke through this level again. So we had the same sort of thing here on the lower time frames, just on the hour one time frame. So we saw price break that recent all-time high, come back down to test it, so sort of giving us a break and retest pattern. And you can see the same sort of thing happening here. We saw our break and then price came back down to retest it. From there then, throughout the London session and New York session on the Wednesday, we saw some consolidation with price just sort of moving sideways in and around this level. Again, another point of control that we established using our fixed range volume profile. From there then, price can sort of staggered itself up, creating all-time highs as it went. So 4,240, dropped back down to 3,242. And then from there, throughout the New York session on the Thursday, we saw an enormous amount of bullish momentum carrying us all the way, carrying this momentum all the way up until the Asian session sort of began to sort of close as it crept closer and closer to that London session. As you can see, most recent all-time highs were here, and the all-time high for gold as of right now, as it stands, is around 3,800 and let's say 80. And then from there, throughout Friday, as we entered into the London session, and then again throughout the New York session, we saw an enormous amount of bearish volume, which dropped price all the way down to this area here at 4,200. And then since then, on that Friday, just sort of before market was getting closer and closer to that close, we saw price push up bullish and sort of finish at this level here. And then you can see that price ended up opening up bullish, consolidation, until now we are in our new week. So on the Monday, throughout today, has been overall bullish in terms of overall price action. So one thing that you may notice, again, as gold continues to create new all-time highs, we are now at a point where we don't have any POIs marked in. So what we're going to go ahead and do is do our normal thing. So we're just going to mark in our point of interest, first point of interest, which is going to be just a simple horizontal ray, just indicating to us this new all-time high. We could in fact draw a point of interest into here. Actually, let me extend this right. We could actually just draw a point of interest like that. We will keep a horizontal ray in there just to sort of mark it in for us, just so it's a little bit cleaner. So just what we're doing there is we're just sort of filling in any of this space between this sort of the exhaustion of this candlestick. You can see price pushed into that place it and then drop back down. So it will be a good area to sort of take into account when it does push back there. Secondly, what we're going to go ahead and do to find our next point of interest is we're going to go ahead and grab our fixed range volume profile, and what we're going to go ahead and do is we're going to mark up from the next sort of area, next point of control that we established, and go over this entire move here. So we have our point of control, and we have our value high and then value low, VAL or VAH, and then POC. So that's going to be your point of control. So this is where most of the orders were placed, which is going to be around this level right here. We can unextend that to the right, and we'll put that in our green, so we know that that's going to be a level we want to take into account. Okay, moving on then, we're going to do the same sort of thing. We're just going to measure this the entirety of this bearish move, and understand that the point of control was up here. Okay, we're going to go ahead and mark that in with a horizontal ray. And then the last place that I want to take into account is from the bearish move and all the way up until this bullish move. Okay, so point of control slap bang in the middle of this, the overall point of control of this entire range. So that's going to be our main points of interest marked in using our fixed range volume profile. And then now what we're going to go ahead and do is just sort of mark in levels that we can see by the eye, psychological levels that we will want to take into account. So the reason I'm marking in this level here is you can see that price has tested on this level a few times as both a support and resistance. There's also going to be another level that I'd like to mark in. It's going to be sort of a shorter level, just this sort of little level here. You can see that price is sort of the body of these candlesticks finished at a support level here. You can see that wicks are touching this level. We had a resistance, and then price sort of had a little fight in this area here. We go down to our minute 5 actually. Yeah, you can see that price did in fact come to this level, test it as a resistance. Price dropped back down, and then we broke back through, giving us a break and retest. So price break of structure, price pushed back down, and then pushed all the way back up. So that's going to be our next point of interest. So as of right now, what we're looking at, what we're currently looking at is we can see and we understand that the overall market for gold is still bullish, and the foreseeable future gold is going to stay bullish. One thing that I keep touching up on is that the dollar index has and is continuing to prop itself up for a major bullish move. And as you know, if you don't know, and if you haven't been watching these videos, then I always say this. I say the stronger the dollar, the weaker gold is, and the weaker the dollar is, the stronger gold is, because gold is almost a fear pair. It is a fear factor within the market. So people, when they see that the dollar is weak, they will resort to gold and they will invest in gold. Therefore, you see price going up as the dollar is currently at a low point, and then obviously vice versa for the other way around. But with the current price action we are seeing, we are going to assume that price is going to continue on bullish from this level. Obviously, this is just the start of the week. The entirety of from this candlestick here to here, we have sort of ranged around over 1,000 pips in range from the market open to where price is right now, and as you can see, price is in between these 2 points of control, and we are going to look at price to push up at least to this point of interest that we marked in here. If price comes into this level here and price tests this resistance and drops back down, we're looking at either this POC that we established here at 4,340 or dropping a little bit further to 3,418, give or take. So sort of something like this. If price tests resistance and then drops back down, we could see price spring off of there. I'll just put a couple scenarios in. We could see price continue a little bit further and then spring off, and then another move that we could potentially see is price just completely skyrockets from this level and breaks through this previous all-time high. If you want to sort of like in the future, you want to work out where if price is to break through a most recent all-time high, and you can sort of roughly guess, I guess, where price is going to go. So for example, if you wanted to measure from here to here, you're talking roughly 400 pips. But the thing is, from if I measure from here to here, that's roughly, it's about 320 pips, and then it completely changes when you look at this all-time high to this all-time high here, as obviously all of these candlesticks were creating all-time highs. But you can get a rough average just by measuring the market from each point where price has created a new all-time high, and then goes on to create another. That's what we did last week to sort of establish that high. You would have seen it at the start of that video, that big, thick, yellow horizontal ray, just a sort of a rough roof. I think it was sort of around this area here, and as you can see, price did end up smashing through that level. So as far as it goes for a start of week slash post-week market review, there's not actually too much we can go over other than price has been just stupidly bullish once again. We can understand as well, I spoke about this in our last technical analysis, that we saw, so economics, just some economic news sort of updates for you lot. We recently saw a quote-unquote Trump insider place a position within the markets where just before Trump was making a speech about the tariffs, and then that supposedly same trader took a short position on Bitcoin, and obviously these new things, so crypto, obviously it's not very new, it's been just what, 2012, but these sort of things have to keep you awake and make you realize that when whatever happens with Bitcoin, something will happen with the dollar, and then if something happens with the dollar, something will happen with gold. It's almost like a domino effect, so you have to make sure that you are taking into account the economic news. It doesn't really affect things too much in terms of sort of normal gold price action. As you all know, if you are trading gold is already a volatile pair, so yeah, there's not too much going on right now. There's obviously a lot of escalation around sort of wars and tariffs and stuff like that, but nothing new really. I know that kind of sounds bad, but nothing really too detrimental in terms of affecting the market in a significant manner. So again, concluding last week, price started off here and price finished. Where did we finish? Let's find it. Price finished here. So you can see the distance from here to here is just ridiculous. So again, last week overall bullish, created a new all-time high of 4,380, and price is on its way up to go and test this point of interest at around 4,372. I need to stop saying 3,000. We're way past that now. Yeah, I'm expecting price to come to this level, test as a resistance and drop back down, and then push up and break this previous all-time high, or just completely smash through it and creating a new all-time high, and then price continues on from there. So I know it's not as good as our post-week market review video or our midweek technical analysis, whichever the last video it was that I did. I think it was a post-week market review. Actually, no, I think it was a midweek technical analysis. I'm not entirely sure, but we had a lot of cool information, a lot of cool stuff to look out for. So today's sort of just like a recap sort of thing. There's not too much to go over, other than price just is continuing on bullish. I think it's kind of expected for gold at this point until we see a major correction on that dollar index. We're not really going to see anything negative happen for gold's price. But of course, you're going to see retracements along the lower time frames. But I will give you a couple little tips and tricks if you are trading. Make sure you're performing technical analysis. It's really nice to make sure you keep your chart as clean as possible. And when I say as clean as possible, I mean no noise. And it doesn't matter what it looks like to someone else. It matters about what you look at, and if you understand what's on your chart, then that's all that matters. It could look really messy and really noisy to someone else, but in the grand scheme of things, if you can understand it and you can see everything that's going on in terms of price action, candlestick confirmations, etc., then by all means be my guest and sort of mark your chart up as you wish. One thing I will say, indicators. Some indicators are cool, some indicators sort of just create confusion and disrupt your overall bias on the market, and it makes you confused, and then it affects your psychology. So just make sure you don't have too many indicators on your chart. But as far as it goes for sort of physically marking up charts like we do, it doesn't really matter. As long as you can understand the chart and you know exactly what you're looking at, then it's fine. So another tip and sort of a rule that I'd live by is make sure you stick to that risk management. There's one thing I will say about trading. It is so simple. It's not easy. Trading is never going to be easy. As you all know, 80% of trading is based on psychology, and people don't really understand nor comprehend that, but it's so important to make sure that you are strict, disciplined, and consistent with your risk management and overall trading style. It's really simple. If you follow a simple trading strategy, you follow a set of rules, for example, max risk 1 to 2% per trade, a minimum risk reward of 1 to 2, whatever your rules are, just make sure you stick to them, because a lot of people, the reason why they fail at trading is they'll have this really good strategy in place, really good trading rules, really good discipline to begin with, and then all of a sudden their account starts going into the negatives, and people end up sometimes on odd occasions, I say odd occasions, on some occasions, people blow their accounts. So just make sure you stick to the risk management, you stick to that discipline, and never veer off of course, because if you do, that's when you start thinking trading isn't a thing, it doesn't work. But I can guarantee you 99% of you on this video can say, or even 100% can say that you have veered off course at least once in your trading journey, and it has caused you to take a big hit. So that's going to be sort of another tip for you. Just make sure you stick to that risk management. Make sure you're not trading emotionally. Remember, you don't have to trade every day as well. Personally, when I'm trading on my own, I only trade Tuesday, Wednesday, Thursday. The reason I don't trade on the Monday, because I sort of see Mondays as market manipulation Monday or manipulation Monday, and then Friday you normally have a lot of high impacting news events that affect gold, so I just sort of tend to avoid those. Tuesday, Tuesday, Wednesday, Thursday, sort of nice price action, good areas to trade with, and a lot of cool setups that you can take. But yeah, rambling on a little bit here, I'll wrap this one up. That's been our start of week / post week market review. I hope you have all enjoyed, and as always, if you haven't already, don't forget to like, comment, and subscribe and or join our VIP. Visit our bot at GSIO admin bot. Via Telegram, drop us a message, click start, whatever it is you want to do. Make sure you are in that channel and receiving our VIP signals. So once again, that's going to be our post-week market review / start of week technical analysis video. I hope you've all enjoyed. Peace.